Hi, it's Lance Edwards, and welcome to Chapter 7 of the book, How to Fund Your Deals. You know, there's two things you market for in this business, deals and dollars. In the prior chapter, Chapter 6, I explained how to find the deals. In this chapter, I explained how to find the dollars. In this case, it means your private money. For these properties you're going to be buying. And this is one of your key success strategies, is how to find these private investors and how to attract them to your deals. And what I revealed to you in the chapter is what I call the Raising Private Money Formula. It's a four-part formula. Those four parts are predisposed, control, low risk, and high return. And I explain in detail how you're going to use those four formulas. Now real quick, just so you can understand it before you go reading it, predisposed means you're only going to market your properties to people who are predisposed to invest in real estate. They've already raised their hand saying, I'm interested in real estate, I'm looking for projects to invest in. In the chapter, I give you a number of predisposed sources of financing for your deals. I'll tell you the top two right now are the seller, through seller financing, which I explain how to get that, and number two, self-directed IRA investors. Those are just the top two, but I give you many, many in here. The rest of the formula, once you identify your predisposed investors you want to present your deals to, these remaining three parts of the formula have to do with the psychology of the private lender. And there's three aspects to it. One is control. I'm going to teach you in this chapter how to structure your transaction so that your investor feels like they have control. Meaning if something goes wrong, for whatever reason, you want them to be able to feel like they can take control and get their money back out. How do banks do this? Banks do it with a mortgage. If someone defaults, they take control by foreclosure. I'm going to show you how to give your investor even a greater feeling of control than a bank has. The third thing you want to be able to show them or demonstrate to them is that this is a low-risk investment. Yes, they have control if they need it, but they're not going to need it. I'm going to teach you all the ways to remove the risk and to convey to your private investor that feeling of low risk. And the fourth part of the formula is the high return. Now, this is an important part. You're going to provide them a high return relative to the low risk that you've established. When you follow this formula as I've laid out for you in this chapter, not only are you going to attract more private money, you're going to keep more of it in your pocket. Because once you position low risk, the return expectations just dropped. This is a powerful, powerful technique for you in creating cash flow and wealth with apartments. Now, one final aspect of the chapter, the question is going to come up, well, what does the Security and Exchange Commission allow? I explain what it allows here, but let me just give you the bottom net of it. When you're dealing with small apartments, you only need to deal with one private investor. You just need one to get started. I'm teaching you where to find them in this chapter, how to structure your presentation to them in this chapter, so you just need one. And when you read in this chapter, you're going to find that, don't worry about the SEC. When you follow the rules I give you in here, that is not an issue. That's Chapter 7, How to Fund the Deals. This is an important chapter in your business. Check it out, read it thoroughly. I look forward to talking to you in Chapter 8.